Welcome back to the Daily Crypto Roundup. Bitcoin is hovering just under $68,000. Solana has confirmed what analysts are calling a bull trap. BNB is compressing inside a bearish pennant that could trigger a continuation move lower. Gemini stock has plunged after losing 3 top executives just months after its IPO. And one of Europe's largest banks has quietly disclosed $100 million in Bitcoin ETF exposure, while simultaneously hedging through strategy puts. There is a lot going on beneath the surface of this market right now, and while panic has eased, pressure absolutely has not. So let's break it all down clearly. Here are the current top 10 cryptocurrencies by market cap excluding stablecoins, based on the latest coin market cap data. Bitcoin is trading at $67,711.49. Ethereum is at $1,966.63. BNB is trading at $617.32. Solana is sitting at $85.01. XRP is at $1.45. Dogecoin is trading at 9.82 cents. Bitcoin Cash is at $525.37. Cardano is sitting at 27 cents. Hyperliquid is trading at $31.28. And Toncoin rounds out the top 10 at $1.41. This price update is sponsored by Kraken. If you're looking for a regulated exchange with deep liquidity and professional-grade tools, Kraken remains one of the most established platforms in the space. Link in the description if you want to explore that further. Now let's talk about Bitcoin, because everything continues to rotate around it. According to CoinDesk's latest report, Bitcoin remains under pressure near $68,000, even as panic has ebbed. That phrase is important. Panic has faded. But fading panic does not equal renewed strength. What we're seeing is a market that is no longer aggressively dumping, but also not aggressively bidding. ETF inflows, which were a major driver of the last upside leg, have slowed. Attempts to reclaim $70,000 have failed repeatedly. Each time price pushes toward that zone, supply overwhelms demand. From a structural perspective, Bitcoin has been oscillating between roughly 66,000 and 70,000 for several sessions now. That's a compression range. When markets compress like this after a volatility spike, they are building energy. The question is whether that energy resolves upward or downward. Right now, the inability to sustain moves above resistance suggests the path of least resistance is still slightly lower unless something materially changes. And that brings us to institutions. One of the most interesting developments today comes from Intesa Sanpaolo, one of Italy's largest banks. Regulatory filings reveal that the bank holds roughly $100 million in Bitcoin ETF exposure. Let that sink in. A traditional European banking giant has allocated nearly $100 million into spot Bitcoin ETFs. That is not retail speculation. That is balance sheet level positioning. But here's where it gets sophisticated. Intesa is not simply long and hoping. The filing also discloses a substantial option position tied to strategy stock. In other words, they hold long Bitcoin exposure via ETFs, while simultaneously holding downside protection or relative value positioning through strategy puts. That is professional portfolio construction. That is not emotional crypto trading. That is structured exposure with hedge components built in. What does that tell us? Institutions are not abandoning crypto. They are integrating it, but they are doing so with risk management layered on top. That is a very different phase of the market compared to 2021 speculative mania. This is capital allocation with derivatives overlay. Now let's move to Solana, because this one matters for alt sentiment. According to Crypto.news, Solana has confirmed what technical analysts are calling a bull trap. Price broke above key resistance near the high 80s, pulled in breakout buyers, and then failed to hold those levels, reversing back down and shifting local structure bearish. That is textbook bull trap behavior. Late buyers enter on breakout. Momentum stalls. Price rejects. Liquidity is swept. Stops get triggered. And downside accelerates. The key level analysts are watching now is around $78. That zone aligns with prior structural support and Fibonacci retracement confluence. If Solana loses that region with conviction, we could see a deeper pullback. If it holds and forms a higher low, then the broader bullish structure may still be intact. But short-term, momentum has clearly shifted. BNB is showing a similar warning sign. Analysts are pointing to a bearish pennant pattern forming after a downside impulse. A pennant, for those newer to technical analysis, is essentially a volatility compression triangle that typically resolves in the direction of the prior move. In this case, the prior move was down. The compression is tightening, and the projected measured move targets the 532 to 537 zone on a confirmed breakdown. For BNB to invalidate this bearish structure, it would need to reclaim resistance near 659 with strong volume and hold it. Until then, sellers have structural control. And then we have the equity side of crypto. Gemini's publicly traded stock has plunged after the company parted ways with its COO, CFO, and chief legal officer just months after its IPO. 3 top executives exiting in rapid succession is not a small internal reshuffle. That is a governance shock. Investors responded accordingly. Shares sold off sharply. Leadership instability in a recently public crypto company introduces uncertainty around compliance, financial reporting, and strategic direction. When multiple C-suite executives depart simultaneously, markets assume there are deeper operational tensions or disagreements behind the scenes. That doesn't mean collapse, but it absolutely means uncertainty. And uncertainty compresses valuation multiples. Now, zooming out, what does all of this mean together? Bitcoin is range-bound under resistance. ETF inflows are slowing. Solana just printed a bull trap. BNB is coiling inside a bearish continuation structure. A major crypto exchange stock is plunging due to executive departures. And at the same time, a major European bank is allocating nearly $100 million into Bitcoin ETFs with hedging protection. That is not a clean bullish environment. It is not a full panic environment either. It is transitional. It is cautious. It is structurally fragile, but institutionally integrated. This is where experience matters. Retail traders often interpret easing panic as bullish confirmation. Professionals interpret easing panic as volatility compression. Those are very different interpretations. The key driver now will be liquidity. If ETF flows resume strongly and Bitcoin reclaims 70,000 with volume acceptance, altcoins will likely follow aggressively. If Bitcoin loses 66,000, then structural breakdown risk increases, and altcoins could accelerate lower. For XRP specifically, the relative stability around the $2 region is notable. It has not exhibited the same rejection pattern that Solana has. But XRP remains highly sensitive to broader market direction. Cardano and Dogecoin are similarly in consolidation mode, waiting for Bitcoin to decide. Let's talk risk management for a moment. Markets that compress after volatility spikes are preparing for expansion. Traders should be watching volume carefully. A breakout without volume is a fake move. A breakdown without volume can reverse quickly. But a high-volume resolution out of compression typically sets the tone for the next several sessions. The Intesa Sanpaolo positioning tells us something deeper as well. Institutions are comfortable owning Bitcoin exposure via regulated ETF wrappers. They are not necessarily comfortable holding unhedged, direct volatility exposure without derivatives overlay. That is a maturation signal for the market. But it also means upside moves may be more measured and less euphoric compared to prior cycles. Meanwhile, corporate crypto equities are facing pressure. Gemini's situation highlights that crypto businesses still operate in a competitive, regulatory-intense environment. Executive churn amplifies that sensitivity. So here is the clear picture. Bitcoin under 70,000 equals caution. Solana bull trap equals short-term vulnerability. BNB bearish pennant equals potential continuation lower. Gemini executive exodus equals governance concern in crypto equities. Intesa 100 million ETF allocation equals institutional integration with risk management overlay. This is not the end of the bull market. It is also not a clean breakout phase. It is a recalibration phase. If you are investing long-term, structure matters less than thesis. If you are trading short-term, structure is everything right now. Watch 66,000 on Bitcoin. Watch 70,000. Watch volume. Watch ETF flow data. Watch whether Solana holds 78 or breaks it. Watch whether BNB resolves upward or downward from its pennant, because the next volatility expansion will likely be decisive. As always, this is not financial advice. Crypto remains highly volatile. Structures can invalidate quickly. Risk management should always come before conviction. If you value clear breakdowns like this, make sure you are following the show. Share it with someone who needs clean analysis without the noise. Drop your thoughts in the comments, smash like, follow, and we will see you at the top.